Mortgage rates are now a full 0.3% lower than they were a year ago, and as a result, we're seeing more and more people applying for mortgages and more people listing their homes as they start feeling like they'll now be able to afford the next home after they sell. And we're actually seeing way more people listing their homes now compared to any other year since COVID. And we also saw a big jump in existing home sales in the latest report that we'll take a look at here in a minute. Dallas County had a pretty flat week while Collin County continued heating right up. And lastly, we got the latest home builders confidence survey, and it's safe to say that home builders confidence is low. And we'll be covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All of that is in the description below. Okay, today is March 24th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, starting with market news, let's start with the latest home builders confidence survey. Now, as you look at these charts, keep in mind this is nationally. Dallas-Fort Worth is the #1 fastest growing metro in the country, and so we're a totally different market than most of the country, and we also have a ton of new construction as we expand our cities. But looking at these charts, home builders confidence is declining in literally every category as of this last report. Why is this? Mortgage rates are still too high, suppressing buyer demand. And now on top of it, they believe their building costs could go way up thanks to these tariffs. It's a huge unknown for them that could totally annihilate their profit margins. So you can see overall builders confidence down, present sales confidence down, traffic of prospective buyers way down. But the one that I do find interesting is the next 6 months outlook. This remained totally flat, which tells you that they think either these tariffs and or the high mortgage rates are going to be short-lived, that something is going to shake out in the next 6 months that cause them to remain flat here. And overall, if the tariffs actually do happen and they do increase the building supply costs, then the obvious solution would be lower mortgage rates. Low enough mortgage rates would bring in enough home buyer demand to increase the prices enough to offset the potential loss in their margins from the higher building costs of tariffs. Which brings us to our next set of charts. This was the existing home sales report for February that came out last week. Total existing home sales increased by 4.2% from January up to 4.26 million sales in February. And though year over year sales did go down 1.2%, but looking at it, last year February was this huge peak, so this February is a little lower than that, just by 1.2%. But you can see that existing home sales have been in a very clear downtrend since 2022, which is how far back this chart goes. But if you ask me, this chart looks like it's bottomed out and it's ready to start climbing up. I don't think it's going down any further than this. I think this was the absolute low, and I think we can expect it to start climbing again. Then looking at the median sales price, we're just under 400,000 right now, but I just want you to look at these clear as day market cycles. Look at that. So you know those people who are always saying the market is crashing, they literally just zoom into these portions of the year every year. And I think they just don't know how to zoom out, because the reality is, look, in 2022, the bottom was 360, then it was 380, now it's just about 400. And just looking at this chart, I mean, this is a very steady uptrend. Both the peaks and the valleys are, you could draw a line straight through these. So prices are in an obvious uptrend, no matter what anybody tells you. Then looking at the month supply, this is another very important one. This one measures the velocity of sales, which means if we were to stop listing houses today, how long would it take before we completely sold out of homes at the current sales pace? And for the last 2 months, we have been right at 3.5 months supply. And when you hear someone ask, is it a buyer's market or a seller's market? A buyer's market historically is what people call it when you have a 6 month supply. So we're at 3.5 months. We won't be in a buyer's market until 6 months supply, which tells you we are still very much in a seller's market, no matter what anyone says. And I think that we all have this really skewed perception because we just went through the whole COVID seller's market, which was just an absolutely insane time, and everything was multiple offers, prices going straight up, nobody was listing their houses, mortgage rates were crazy low, so there was all-time high buyer demand. I mean, that's not what you should think of when you think of a seller's market. A seller's market typically is a lot closer to what we have right now. A 3.5 month supply, that is a pretty firm seller's market. So we've got to get out of the mindset of seller's market means multiple offers on everything. It doesn't have to mean that. And you can see right here in the month supply with the current sales velocity, we're nowhere near buyer's market. So that's the existing home sales report. Let's move on to the national data. We're going to be starting with national housing inventory. This week we had an increase of 12,529 more homes for sale in the country. This gets us up to 30% more inventory than we had last year, to a total of 658,155 homes available for sale in the country. This same week last year, inventory was only at 512,759, so still way better than last year. Then for reference, the all-time inventory bottom down here in 2022, we only had 240,000 homes for sale. The peak of last year, we had 739,000 homes for sale. And this same week in 2015, we had about 985,000 homes for sale. So you can see all of these lines. Every year we just get a little bit closer to a normal market, which would be much closer to this top line. Now looking at new listings, this week we had 9,373 more new listings than we had last year. That's this big gap, for a total of 69,701 new listings this week. And this is great news. More and more people are listing their homes, which means more inventory for you to choose from, and less chance of prices running up quickly when rates finally do drop again and home buyer demand comes back in. So this is maybe the best news of everything, is just seeing how far ahead we are new listings wise of any of the previous 3 years. Now looking at pending sales, this week we still have 2.8% fewer sales pending than we did last year national. We've been running about 3% below, so 2.8 is a little bit closer. And you can see all the start of the year, we've really been following very closely to 2023's line. We finally broke out of that this week and are getting just a little bit closer to last year's line. But overall, the number of pending contracts should continue until late May, early June. But this week we have 346,533 homes pending in the country, which is about 10,000 more than we had last week. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a small increase to 34.32% of homes took a price cut this week. But last year we got as high as 39.9, the year before 39.2, and then way back in 22 we got as high as 43.2. And just so you know, it's normal for this number to be going up now. We don't know how high it's going to get just because it started curving up earlier than usual. You can see every year it curves up at a different time, but the last 2 years, for example, the peak was almost exactly the same, even though the slope was very different. But just know, if you want prices to be coming down, this number is going to have to be going up a lot more than this. Okay, moving on to mortgage rates. We started off last week at a 6.8. We ended up lower to a 6.72. And I think earlier I said we were 0.3% below where we were last year. I was actually looking at FHA rates when I said that in the intro. For conventional rates though, we are still 0.24% better than we were last year, which is still a significant savings. And then looking at mortgage purchase applications, we're pretty much flat week over week. We slightly went up, but that is still a 6% increase year over year. And this gives us 6 straight weeks of positive year over year growth. And I've been saying this for more than a year. I still believe it. There's no reason to believe that mortgage demand is going to grow significantly with rates this high. Real demand is going to come in once rates stay below 6% for a sustained period of time. So we're still way up at 6.7. We've got a long way to go before real demand comes in, but this number would be way up here if we were around the 6s. And the evidence we have for this is new construction has been offering below 6% rates for a long time, and they've been selling way, way, way better than existing homes. And right now, a lot of new construction is offering 4.5% on FHA rates compared to 6.3% market rates, and they're still selling way more homes. So the demand is way down there below 6%. Until then, you can just expect this kind of purchase application data. Okay, that's it for national. Now let's move on to the local markets, starting with the MLS data of Dallas County. Starting with new listings, this week we had 584 new listings. That's actually 116 less, which is not totally surprising because these 3 weeks have been very high. I don't remember ever saying that we had 700 listings in a week in Dallas County. But nothing to be concerned about. Just think of this as a line 529. We're looking for the average. This is just 1 week data. Let's see where next week lands. It is a big departure from the national data where we saw another big jump in new listings, but it's not anything to be concerned about because it's just 1 week. We had 279 closings. That's 4 more than last week. 52 of those were immediate sales, meaning they contracted within the first week of listing. That's 11 less than the previous week. We had 337 new contracts last week. That's 15 more than the previous week. So less new listings while more homes are going under contract. That's not what you want to see as a buyer, because if that trend continues, then prices are definitely going to go up. But in total, we have 2,271 homes either under contract or pending, and that is 76 more than last week. So that's Dallas County. Moving on to Collin County, we had 479 new listings, another decline here as well. That's 59 less than last week. 214 closings, 25 less than the previous week, although 51 of those were immediate sales, which is 6 more than the previous week. 215 new contracts, which is 10 less than last week. And in total, 1,930 homes either under contract or pending. That's 43 more than last week. Now we're moving on to the Market Action Index, starting with Dallas County. If you've never seen it, it takes into account all of this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in. Dallas is currently a 38, which is still considered a slight seller's advantage. As you can see, things have been heating up for weeks, but this week we actually came back down on the median list price and median price of new listings, which puts us really to more of a sideways over the last few weeks, as well as the Market Action Index has been flat for about 2 weeks. I mean, it literally dropped 0.01 this week, so that's definitely flat. So it looks like it's stalled out for a minute here. Inventory is continuing to climb, which is good. Average days on market went up by, oh no, it stayed sideways. The line looks like it's going up, but it's actually, they're both 100. Median days on market remained at 56. So yeah, things are taking a pause here in Dallas County, although remember, we're already at a 38 as we go look at Collin County. Collin County did not take a break this week. Things are still looking like they're going straight up, but you have to keep in mind, Collin County is still only at a 36. So where Dallas started heating up like in December, Collin County didn't start until just now. So it's normal for their line to look like it's going up quicker, though they're still not quite as hot of a market as Dallas County. But their median list price continued to climb last week by about $5,000. Median price of new listings had a big jump from $529 up to $555. But again, that's 1 week data. This is gonna come down and go up. It's gonna be averaging. So don't be worried about big jumps like that. Average days on market continued to decline here though, 89 down to 86. Median saw another drop. So look, we were at 77 days on January 17th, and now the median is all the way down to 49. That's a big drop. Number of homes having price decreases actually looks like it's going down over here, yeah, to 41.65. So this has definitely been trending down. Less and less homes are having to take price cuts before they sell. They had a good climb in inventory as well. They had a climb in overall inventory as well. That's good. And overall, you can see the Market Action Index is heating up, which is totally normal for this time of year. So everything about Collin County is looking extremely normal. And you can know if you expect to buy between now and the end of the summer, then you're going to be buying something higher. The trade-off is you're going to have more options to choose from because there's going to be a lot more people listing in the summer as well. So if your goal is just to get the absolute lowest price and that's your number one thing, then you probably shouldn't be buying in the summer. But if your goal is to get the best house that you want, your best chance is going to be in the summer. You just know you're going to be paying a little more for it. All right, now we're moving on to my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same Market Action Index number. Remember, 30 or below is a buyer's market. Starting with the absolute hottest cities, Carrollton, Texas remains the #1 hottest. It's been there for as long as I can remember. Then at number 2, Coppell heats up 1, Plano heats up 1, Grapevine heats up 1, and then Louisville cools off 3 spots this week. Richardson remains, Saxe heats up 1, Grand Prairie cools off 1, Allen remains at number 9, and then Ferris jumps onto the list at number 10, replacing Irving, which was number 10 last week. Then we like to zoom into specific zip codes. The absolute hottest zip code in all of Dallas and Collin counties is Plano, Texas, 75093 at a 55.81. Then Grand Prairie, 75052, Carrollton, 75007, Carrollton, 75006, Plano, 75025, Coppell, 75019, Plano, 75075, Richardson, 75080, Plano, 75023, and Grapevine, 76051. So those are the top 10. If you own a home in one of these cities or zip codes, you should be able to sell for top dollar. Now doing the same thing, but looking at the coolest markets, the absolute coolest has been for a very, very long time, remains Blue Ridge at a 28.37. And then this week, Sunnyvale cooled off 5 spots. Rockwall cools off 3, Farmersville cools off 5, Royce City heats up 2, Salina cools off 2, Van Alstyne heats up 3, Lavon heats up 3, Melissa jumps onto the list at number 9, and Leonard heats up 8 spots. So Melissa jumps on at number 9, and then Prosper, which was the hottest city on the coolest cities list last week, heated up off the list. And we are down to only 2 cities that are actually buyers markets left in all of Dallas and Collin County. That's just Blue Ridge and Sunnyvale that are below a 30. Then looking at specific zip codes, we have 4 which are buyers markets. That's the absolute coolest of Blue Ridge, 75424. Then Rockwall 75032, Grand Prairie 75054, Sunnyvale 75182, Farmersville 75442, Dallas 75233, Royce City 75189, Dallas 75235, Salina 75009, and Van Alstyne 75495. Remember, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.